Bloomberg called her the best investor you've never heard of earlier this year. But of course, you know who she is. She's a friend of the program, Cathie Wood. Let's bring her in, ARK Invest CEO and CIO. So, Cathie, we've had a number of guests on today that have sounded really down about where the market is and where the economy is. You're a little bit more optimistic here. You think in these times of turbulence that there's actually opportunity. Is that opportunity in like 3 months, or is there opportunity you're seeing today?
Well, today, certainly. We're never going to catch the bottom. And we could be like we were after the shock in 1987. We could be in for a rebound and then a retrace, which I don't even remember that, to be honest. I was in the market. I was pretty young then, but we had the shock, we had the retest, and then the market just kept going on. But the reason we tend to do pretty well coming out of this kind of period is during tumultuous times, innovation gains traction. It gains market share. So two really good examples of that in 0809, one of the worst recessions ever, technology spending down 20%, 30%. What was Salesforce.com's worst quarter? Up 20% in revenue growth because it was providing an answer. How do we cut costs? How do we get rid of these enterprise licenses and just pay as we go? Same with Amazon. Its worst quarter as retail sales were going down 2 to 3% for retail sales. Its worst quarter was up 14%. So, and we see lots of opportunities for innovation to gain traction now. And we've never been in a period where there has been more innovation. Never. I mean, even going back to telephone, electricity, and internal combustion engine, that was a lot of change at one time. We have 5 platforms evolving today. So we think there's tremendous opportunity.
So, Cathie, I know in the past we've talked to you about CRISPR and other similar types of technologies. Certainly right now, I think regular citizens are desperate for answers on how we can fix this virus and I mean, just even testing folks. As you look at your portfolio right now and the companies and technologies you're interested in, have any of those companies come out with ways they think they could treat coronavirus or ways they think they could find an immunity or a vaccine for this? And where does that stand?
Well, I guess the most important thing that's happened is that with Illumina's machines, scientists were able to sequence the virus in 2 days. In 2003, with the SARS virus, when sequencing was just happening upon the scene, it took 5 months just to figure out what the virus was, what it was. We did that in 2 days, and that has given a lot of biotech companies, pharma companies, and other innovative companies some good guides as to where they should steer their research to find the vaccine or to steer the antiviral medications that Gilead already has in its both its pipeline, but also in its library, so to speak. So I think the sequencing of the virus was critically important to triggering research that is going to find us the solution much faster than otherwise would be the case. Vaccine won't come until next year in scale. We have to be working with medicines that are already, they've already been approved, like some antivirals, or like what President Trump mentioned today, chloroquine, I think is the name. It's an anti-malaria drug that's 75 years old. It's a generic drug. It's working on the virus in both China and South Korea, and I believe Italy. There were 3 professors this week who wrote about it and said, why aren't we looking at this? So they were from Stanford, from Columbia, and Johns Hopkins. And sure enough, and I found it because Elon Musk tweeted about this study yesterday, and then I tweeted it. And somehow, I'd like to think, the ripples off of Twitter got to the administration. But somehow that's the first thing President Trump featured today.
Okay, Cathie, you just teed that up perfectly. This is Andy Serwer. Because of course I have to ask you about one of your old favorites, Tesla.
Yes.
And it almost hit $1,000, and now it's almost back at another kind of famous number, which is 420. And I just have to ask you, is this, is now a time that I should just be pouring money into this thing?
Well, we report our trading every day for our ETFs. We publish our trades. We bought it back to our max, to 10%. A lot of people were wondering why we were selling it when it was near 900. Well, I've been working in the world of disruptive innovation for so long that I've seen controversy come and cut stocks in half, just like Tesla has been cut in half here. We think this is one of the most important stories in the market when it comes to innovation. It's all about the shift to electric vehicles, the shift to autonomous taxis. And we learned something from Tesla's last quarterly call. It will probably launch its own ride-hailing service this year with human beings. So it's going to be providing jobs for people out there. And that will be providing cash flow for Tesla. So our base price, our base price target, base case is still $6,800, even assuming ASPs, average selling prices, come down and production comes down by 20% for this year, but then revs back up pretty dramatically after that.
Cathie, you've been writing about how people are willing to change their behavior in a time of turbulence and fear. So I just think about myself. Here I am sitting at home, ordering from the internet. I can change my behavior, but there are losers in that as well. Are we kind of ripping off the Band-Aid on what might have been like a decade of slower change, but is now going to be rapid, and there will be losers? Say, Sears, which we've been watching spiral here. Do a bunch of retailers just go out of business a lot faster? Does the theatrical window for movie theaters, which they've been so resistant to change that, is that going to change instantly because they're just going to open up pay-per-view windows online? But that leaves a lot of losers too, right?
It does. It does. And in fact, Jen, you're highlighting a point that we've been trying to make for a very long time. There has been a massive shift to passive investing or benchmark sensitive investing. So what kind of investing is that? It is investing in what has worked historically. If we're right, a lot of what has worked historically, which populate the indices right now, they're going to be losers. They are value traps. And yes, as I mentioned before, we really believe that the innovators are going to gain market share at a faster rate than otherwise would have been the case. So you hit it. One example of that is digital wallets. So I don't know if many people know this, but cash is a super spreader when it comes to viruses. Do not use cash. Now, a lot of people are learning that. And so what are they doing? They're signing on to Venmo and Cash App. So that's PayPal and Square. They probably wouldn't have done it as fast, but this notion that cash is a super spreader, they do not want to be responsible, nor do they want to be a victim of getting the virus from cash. We're seeing all of us at home, sure, as you mentioned, streaming and shopping from home. But very importantly, as you know, with your 3 children, you've got children not in school. So now we're going to have online education. Yesterday, 2U, which is in the top 10 of our portfolio, it's an online educational platform. It has been servicing graduate schools, but now it's going into undergraduate schools, and it's doing short courses to provide certificates and boot camps for programmers. This is a perfect environment for it. What was so interesting about 2U yesterday is because algorithms were shooting all around from the bond market to the equity market and to the currency market and so forth, because it's going to have to raise cash probably within the next year, algo's picked on this, and it should have been a prime beneficiary of what's going on right now, and it was down at a double-digit rate. I'm happy to say that with this rebound, it jumped, I think, 26% today, because it's such an obvious solution, and online education is going to gain traction. Not only is 2U going to help solve your problems as a parent with your children at home to some extent, but it is going to solve the school's problems because they need to get on board online education in a quicker way. And then supply chain management has been really messed up. And we've talked many times on your show about 3D printing. There are part shortages all over the place. So this is 3D printing, which has been mired in what we call the valley of despair for the last, gosh, it's almost 6 years as the industry pivoted from the consumer space to the industrial space, so aerospace, autos, medical. We think 3D printing like Stratasys, Proto Labs with its quick turn manufacturing and 3D printing services, Materialize with its 3D printing software, we think they're going to get a booster shot here because they're a solution to a problem. And we always knew they would be. We know that 3D printing collapses the time between design and production, and it collapses costs, and it gives power to designers. So a lot of industrial designers are going to have much more successful futures going forward than they have even recently.
Cathie Wood, ARK Invest CEO and CIO. So great to talk with you during these times. Hope to again soon, maybe not in our homes.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.